What's the invisible killer for a financial institution? The thing that can just destroy trust faster than a market crash.
It's not always the obvious things, is it?
Yeah.
Not the balance sheet, not some tech failure.
No, it's a damaged reputation. And when that damage comes from the murky world of financial crime, that's when things get really serious.
Precisely. And that's what we're digging into today, reputational risk.
Hmm.
Specifically, how it really takes hold, spreads in the context of FinCrime.
Right.
Think of it as this vulnerability, this potential for an organization to lose its good name because of negative events, maybe bad actions, or even just who it gets associated with.
Yeah, and it's not just about bad headlines for a week or two.
No, definitely not. It goes much deeper. It hits the strategic health of the institution right at its core.
Exactly. We've been diving into insights from FinCrime Intelligence, and what really jumps out is that this isn't just like a fleeting PR problem.
Hmm.
We're talking long-term survival, aren't we? Customer loyalty, employee morale even, and crucially, investor confidence. It affects everything.
And when financial crime gets mixed in, say, lapse in your AML controls or maybe a failure on sanctions compliance, it acts almost like a highly contagious disease for the reputation.
It spreads fast.
Very fast. It can trigger intense media scrutiny almost overnight. Customers might start leaving, and regulators definitely start paying closer attention.
Okay, so here's something really interesting from the FinCrime Intelligence material. The actual hit to the firm's reputation, the damage there, it can often be much, much bigger than any financial penalty.
That's a key point. We see these big cases, the major fraud, bribery scandals, or sometimes it's just poor due diligence that comes to light.
Yeah.
The fines might be large, sure,
Mm.
but the lasting damage, the struggle to win back trust, to regain clients, that can be far more punishing financially in the long run.
It's like a constant drain rather than a one-off cost. That fine is a hit, but the reputational fallout just keeps costing you.
That's a good way to put it. And it really underlines why you absolutely have to factor reputation into all your risk management thinking. It's not optional.
Not just nice to have.
No, it's essential.
Yeah.
It needs to be woven right into strategic planning. Survival, really.
Okay, let's get specific then. What kind of financial crime events are the real reputation shredders?
Well, top of the list definitely is any kind of involvement, even facilitation of serious stuff like money laundering or terrorist financing.
Right, the absolute worst case scenarios.
The perception that your institution enables that, it's incredibly toxic.
Mm.
And similarly, just failing to spot and report suspicious activity like you're supposed to, that sends a terrible signal.
Yeah, being seen as the weak link,
Right.
that's a label that sticks.
What else? Associations. Getting linked with high-risk clients is a big one. And shell companies, that's often a red flag because they can be used to hide who's really behind the money.
Makes sense. Opacity is risky.
Very. And then, of course, any connection at all to sanctioned individuals or entities, that's a major, major risk.
Yeah.
We also see big reputational hits from not handling fraud or, say, cybercrime incidents well. Customers expect you to protect their money and their data. You know? A poor response really shakes confidence.
And the really public stuff, the regulatory actions, the big fines announced in the press.
Exactly. Those are basically public failures broadcast to everyone. And the consequences pile up, don't they? It's not just bad press.
No.
Social media can just explode, amplifying everything. You lose customers, trust evaporates, then maybe your credit rating gets downgraded.
Which makes everything more expensive.
Like higher borrowing costs
Yeah.
affect stability, and it can seriously block you if you're trying to get licenses or form new partnerships. It closes doors.
So, okay, we know it's vital, but how do you actually measure this? Manage
Yeah.
something that feels so intangible. Reputation, public trust, you can't stick it in a spreadsheet easily, can you?
You're right. It's definitely trickier than, say, credit risk or market risk. It's not a simple calculation.
Mm.
But there are tools and methods now. Well, media monitoring and sentiment analysis tools are pretty sophisticated these days.
Mm.
They track how you're being discussed, the tone of the conversation online and in the news.
And social listening, I imagine, gives you that real-time feel for public mood.
Absolutely. You can monitor conversations, spot negative trends early, maybe even address them before they snowball. That's crucial.
Okay.
Then you have more sort of traditional indicators like client satisfaction scores, customer retention rates. If those start dipping noticeably, it could be an early warning sign.
And regulatory exams, obviously. The feedback there is a pretty direct reflection on how well you're managing things.
Exactly. That's a key input. And don't forget third-party risk systems. Who you associate with matters their reputation can rub off on you, good or bad.
So you pull all these different threads together.
That's the idea. The real value comes when you integrate these metrics, these data points, into your main enterprise risk management framework, your ERM. That way, you get a much more holistic view, and you can be more proactive about spotting and dealing with potential threats to your reputation.
So prevention is obviously key. What are the core things institutions need to do to shield their reputation from these FinCrime risks?
It really has to start with strong governance, a solid ethical foundation, and a culture where compliance isn't just a checklist, it's ingrained.
The tone from the top idea?
Yes, but also tone from the middle, tone everywhere. It means having really robust internal controls for AML, fraud detection, anti-bribery, anti-corruption, the works.
That's the bedrock. What else builds on that?
Training. Continuous, effective training for everyone. All staff need to understand what reputational risk is and how their specific job plays a part.
Makes sense. Everyone's a risk manager, in a way.
In a way, yes. Then transparency. Being open and communicative with regulators, with your stakeholders, with the public, especially when things are difficult. That builds credibility.
And knowing your partners, as you mentioned before.
Absolutely critical. Rigorous due diligence on third parties, suppliers, partners, anyone you deal with. You have to avoid getting tangled up with unethical or high-risk entities.
Okay. And having a plan for when things do go wrong.
Essential. You need a well-rehearsed crisis response plan. So if an incident happens, you can act quickly, decisively, and effectively to manage the situation and minimize the reputational fallout.
It almost sounds like being transparent and ethical isn't just about dodging bullets. It can actually build trust over time, even if you stumble.
Exactly right. How you handle a crisis, how you demonstrate commitment to fixing things and doing the right thing, that can massively influence how you're perceived long-term. You can potentially come out stronger.
And the regulators are watching this closely too, aren't they? FinCrime Intelligence points out that bodies like the FCA, FINRA, MAS, they're explicitly talking about reputational risk now.
Yes, they are. And that really shows how seriously this is being taken. It's not just about the financial risks or the operational ones anymore. Institutions are expected to think about the reputational angle of their decisions. Things like who they onboard as customers, how good their transaction monitoring really is, their overall corporate governance.
Why the increased focus from them, do you think?
Well, regulators know that if a major institution suffers serious reputational damage, it doesn't just affect that one firm. It can create instability, shake confidence across the whole financial system. So it's a systemic concern, too.
So looking at this whole complex picture, financial crime, risk, perception, it seems clear that a strong reputation isn't just, a nice bonus.
No, absolutely not. It's fundamental. It's essential for long-term success, for stability, for resilience in this industry.
It really is the foundation of trust, isn't it? The bedrock, like you said.
Exactly. Without it, the whole structure is shaky.
So thinking about all this, the deep connection between financial crime and how you're perceived, it leaves us with a question, doesn't it? For you listening, what proactive steps can you take, whether you're working inside the industry or leading an organization? How do you not just prevent the crime itself, but actively guard that incredibly valuable yet often invisible asset, your good name?
Yeah, that's the crucial question to keep asking. How do you protect it?